All right, everybody, this is a gold forecast for week commencing the 27th of July to the 31st. So that's week commencing 27th to the 31st. So the forecast for next week is actually the same as last week and the previous week, etc. That's because we haven't done anything. We haven't really moved. So I'm going to quickly talk about the main things, and then I'm going to move to explaining everything, because just in case this is the first video you're actually watching. So first of all, this is video number 12. Now, um, if you don't understand anything, don't worry, I'll explain it in just this one video, so you only need this one video. However, if you find anything still a little bit tricky, we do have other videos. Okay, so there's only 12 of them, 11 of them. So this is gold, gold futures. I'm on the daily, so I use the daily, and you can see we've gone nowhere for several weeks, and I'm still bearish. Uh, the reason is because we're below this moving average, so that's bearish. If we're above it, we're bullish. And the target, once we can get below this mess around this 4,000 or 3,900. The next level I'm looking at is this blue line, 3,008, say 850-ish, okay? If you are bullish, the next major level is 4,500-ish, okay? Now we do have um, auction levels between them, but I'll talk about them when we get closer to them. For now, those are still the levels, so no change. Okay, so going into next week, still bearish, still expect us to move to the next auction level. Now, the logic behind this is, of course, based on my 2026 target, which is at this black line, 3,500, and that's simply a fib projection based on all-time highs here to this low, and then if you project that range from this third level down, that's the 161 fib expansion, and that level overlaps with an auction level. Okay, so that's where that projection comes in. Now, that projection is misaligned, or it's not the same as the professionals. So Goldman Sachs, Merrill Lynch, Bank of America, all these guys have their level, so the 2026 target at 5,000 to 6,000. So clearly there's a misalignment. Okay, so that worries me, but it is what it is. Now, like I mentioned, because this is the 12th video, and I do want the newcomers to understand what's going on, I use auction levels. So what are auction levels? Auction levels are simply, if I go back, see these lines I've drawn in, all these lines, like this one, this is a big one, these are much smaller ones, okay? All these lines are auction levels. Think of these lines like support and resistance, okay? They're just lines. So in the olden days, what I used to do is just draw a line on the chart based on touch points, okay? That's it. That's what they are. I've just automated those lines. So I do have an indicator which is internal. It's not external, it's internal. And it automatically does this for me based on the daily time frame. Okay, it just plots this line consistently. That's what I'm using for the auction levels. It's a concentration of buyers and sellers. So how do I actually use it in the forecasting? So think of it this way. As a trader, there are two problems I'm trying to solve. The first is, where does the trade take place? So think of that as your location. And the second is, when does the trade take place? So think of that as your timing or your model, etc. So that's when you employ things like your trade logic, might be ICT, VSA, supply and demand, etc. That's the second part. These videos, so these forecast videos, are simply based on trying to resolve the first part, the first question, which is where, location, where does the trade take place? Now, there is a prerequisite, and that is you need a bias. Without a bias, you can't actually answer that question. I simply use a moving average, a red thick line, as you can see right here. So if price is below it, I'm bearish. If price is above it, I'm bullish. That's the simplest way to explain that. So once I know my bias, it's just a matter of location. So I'm going to explain using 2 weeks ago. So I'm currently not in a trade, but I'll use 2 weeks 2 weeks ago to explain the whole how everything kind of works, how my mindset works. So when we were here at this level, I exited my trade and I said we're going to wait for price to do what? We're going to wait for price to go back into the auction level to enter a new trade. Okay, so if I'm bearish, I want price to go up. If I'm bullish, I want price to go down into the auction level. Why into the auction level? Because the auction level is where you enter and exit your trades. It's as simple as that. You don't do it anywhere else. So we have an auction level above us. So at this point, so let me maybe do the replay. Maybe that would help. What I'm going to do is just break it up to somewhere here. Okay, so I said we have an auction level above us, and we also have the moving average, which acts like a dynamic auction level. And I said we'll wait because we may get liquidity at this auction level. When price went there, now I've answered the first question, location. The next thing I have to answer is when, execution. Okay, that's different because I have to drop down time frame and then think about the logic, blah blah blah. That's different. But price, these auction levels act as PD arrays. They're not PD arrays, but they act like PD arrays. Price is simply going from one auction level to the next auction level. That's all it's doing. If I switch on just for fun, I'm just going to switch on the auction level. Okay, it's a bit messy. So it's a bit messy. Okay, so all price is doing is just going from one auction level to the next auction level. Price comes down here, taps this auction level. Price goes up, taps this auction level. Price comes down, taps this auction level. Price goes up, taps this auction level. Price eventually comes down. Okay, now here, I don't know if there's actually an auction level right here, just below it. As you can see, taps it. Sometimes it'll overrun the auction level, but it's tapping the auction level. It taps this auction level. I'm squeezing my chart so you can see it. And then when price gets here, what does it do? It goes back up, taps this auction level. Now remember, this is a daily chart. Gets to this auction level, taps this. Where is it going? Goes and taps. There is an auction level there, by the way, below this level. Um, it's just short, and then goes back up, taps this auction level. So the point I'm trying to make is through observation, uh, price is simply going from one auction level to the next auction level. That's why I use it for entries and exits. So when price gets here, my mindset shifts. I'm no longer looking for location. I'm looking for where, when, sorry. I'm looking at things like VSA, supply and demand, ICT, logic, price mechanics at this level. And it's no different from today. Okay, it's the same. I'm currently not in a trade. So, and there is an auction level right here. I haven't drawn that on. So I'm going to wait for price to do what? Move away from the auction level, okay? Come back into it, and then take the entry. It's simple logic. If you're bearish, you want to see price go up into the auction level. If you're bullish, you want to see price go down into the auction level. Right? You can use the daily as your uh, reference. And then only when you're at that auction level on the daily do you drop down into your lower time frame. And all you're doing is targeting the next auction level or the next one because you always assume the auction level will hold. Price can only do three things at auction levels. It can reverse, which is what we expect. It can continue, so you can just tap it and just continue, like you have in this example right here. Okay, and you can see where it goes in, hesitates, pauses, and then goes. Or it can consolidate. So basically what we have here. Okay, there is an auction level here. I just haven't drawn that on. And by the way, you can compare two securities. So I'm on gold. I look at silver as well, and I'm using both to streamline my auction levels. Okay, you don't necessarily just have to look at one. You can look at both. Okay, because technically they should be doing the same thing. So it gives you just more confidence. So that's really it. If price isn't reversing or isn't continuing or isn't, I think the third one I forgot to mention was it basically is plateauing. Think of that as a consolidation, seek and destroy, churning, etc. It's going to do those three things. So if I'm bearish and price is going up into the auction level, what am I expecting? A reversal. I'm expecting it to tap into that auction level and then reverse. That's what I want. That's what I'm expecting. So my mindset needs to shift into that mode. So you already have the forecast for next week, by the way. So you can really end the video here if you want. But what I'm going to do now, just for fun, is I'm just going to show you the logic I used here. Right. So this will vary. I may need to use a two-step, but I'm just going to show you. So this is not to do with the forecast. This is more to do with the uh, you know when you want to take the trade. So in this one, I went to the 1 hour. So you can go to any lower time frame, 20 hours, 8 hours, 4 hours, whatever you're comfortable with. And here, if you are a VAC person, you will recognize price is doing what? It's mushrooming here. When price goes into this auction level here, or the 1 hour, there's hidden selling here. Then we generate all these price actions, which is all internal, so this 1 hour. So I've got a line below it. I'm waiting for price to break below it because we are mushrooming price. This is a very common term if you are from a VSA background. You don't need to know what VSA is, but it's very common. This candle here is supply, sweeps the high. So I could have taken a trade here if I was being very aggressive, but I waited for price to get below this level because I'm looking for a no demand at this point. I'm looking for price to go back up and give me a no demand. Now, this is where timing and all that funky stuff comes in. So there are really certain times of the day I'm really looking to take a trade. Um, Obviously, I've got certain shaded boxes, and I'm trying to take the trade in those shaded boxes or just after those shaded boxes. Now, we don't have anything here, obviously. We get a no demand, but it's the end of the day. So I just wait. I just wait. And I'm waiting, price goes down, the day starts, and then eventually we get another no demand here. Okay, that's where I take my trade. So that's because my mindset is it's shifted. I'm not worried about the location, which is what, of course, this video is about. I'm now at this point only focused, laser focused in on execution. So I'm employing whatever model I need, a two-step model, whatever that is. Okay, so I mainly use a two-step, but I'm from a VSA background, so I also technically use that as well. So that's just a little bit extra in the video, just in case you want to watch till the end, or you stay till the end. Hopefully you've got some insights. By the way, this is video number 12, so there are really other videos you can watch if you want to. But like I said, hopefully I've explained everything, so you don't really have to. Thank you very much for watching. I'll see you in the next video.